Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn Associates with your agriculture update for this Monday. And we're sitting here now at the 22nd of October, 2018, and the time now just after 3:15 p.m. Central Daylight Time. Pretty soon will be Central Standard, by the way. As you can see in the grains, a very mixed day. Wheat taking it on the chin the most. Then the bean market up 2 cents on the day. Very tight range today. And the corn market with the nickel range as well, but another up day. As for other markets, we saw the sugar market down. Coffee looks like it may have stepped out of its uptrend, and I'll show you that in a minute here, why. When we come to the weekly area chart of closes, for the week we're up 1 3/4 cents. The market now for a couple of weeks has been able to stay over that 18-week moving average of closes, which gives the market a bit of a bias to the upside. When we look at January beans, now remember I just said January, we were watching November, but it's time to move to the Jan. Some people will wait this whole week and then make their move. Why? If you get a good trade on, you want to hold it, it's probably the Jan that you're going to look at. As you can see, the market's in a pullback form here. The last break low, recent one, was to the 860, and we can go all the way back down here for that big break low. The chart obviously looks a bit different than the November. As you can see, this big break carried you here over the 860 level, shot itself up, and then made a pattern of lower highs, lower lows, the definition of a downtrend. To break that pattern on the current chart, you'd have to take out right now the 904 level. When we look to see where the market is with its bias, it's down. We have a market that's got lower highs, lower lows. You see that. Prices have now settled under the 18-day average a couple of days. That gives it a downside bias. The resistance on this chart was the 100-day average and the upper Bollinger Band. They came together just the way they did in the November contract, put the pressure on the market. The next support, if the market wanted to make a run for the lower Bollinger Band, comes in at 855. Momentum is down in this market. When we look at the meal market, and we still stay with the Dees meal at this point, you got up to the upper Bollinger Bands, never could get to that 100-day average, and then pulled back on Friday, breaking through the previous break low. So now we have no trend as defined by the definition of an downtrend, having lower highs, lower lows, and uptrend, higher highs, higher lows. Therefore, I just see a market that's, if you will, waddling back and forth in here. It pulls back consistently almost to that 18-day average. Do you see that? And tries to figure out from there where to go. But the overall product of this market is sideways action. In the soybean oil market, we now have a market with higher lows, and we've already had the higher highs. So that part's bullish. The market negates that because prices are not closing back over that 18-day average of closes, and momentum is down. This is a chart just full of divergence. In the corn market, battleground seems to be the 18-day average of closes. Again, we have one of these patterns that's more sideways than anything. With the lower low, the higher high, we pull back here for the support at the 18-day average after getting up to the 100-day average. And if you'll notice, the market did stop when it got there, so that was your first resistance point. If it exceeds it, maybe it gets to the Bollinger Band. It did. On the way back down, it tries to check out the 100-day average, see what supports there. It falls back last Thursday, again hits the 18-day average of closes, and now it's trading in between that and the 100-day. It's looking for direction. In the wheat market, again, sideways action. This is a common theme right now we're getting in many markets, even those outside of the grains. But it's this sideways action that we're getting at this point in time without a trend, with the higher highs, the lower lows just caught in these Bollinger Bands, with the market coming down at this point. In the sugar market, we made a high today that got up to the old high right here of $13.95, closed lower on the day. Can't put a lot of anything on that. I look at this. When the slow stochastic study converts itself from being overbought to getting both numbers going sideways over 80 for several days or more, I say the market is embedded or locked in the trend. It's a change from being overbought. And until the red line drops down, I think the market gets bought by the pros on the break. When we get to the coffee, this is what it looks, and it happened today when you lose the embedded reading. Now, the only time a market can re-embed is the very day after it loses it, which would be, in this case, Tuesday. What I think is going to happen is the pros are going to sell short now up here, looking for price and the 18-day average to get together quickly. The word is quickly. If it takes a prolonged period of time, that idea doesn't hold muster. In the cocoa market, we've had a pattern of higher lows, higher highs, momentum up but overbought. The market came down, couldn't quite get to that 18-day average coming up here. Now the question is, does it get to the upper Bollinger Band? If it does, it is the number that I think the pros are going to take their positions off against. Doesn't mean I'm right, by the way, but just my thought. Market's still in an uptrend, but overbought. The cotton market came to life today. Higher lows, higher highs. It's had it. It's been caught, and I'll take this off, in this sideways action. This was Friday's action. It still had an uptrend Friday with the higher lows, higher highs, but the support, was it going to challenge it at the 77.29 level? It did not. It went to the upper Bollinger Band. Now, is so often the case, and I keep pointing this out, when you first get up to the upper Bollinger Band, it's not uncommon to get overbought. Yes, I think the pros are taking profits up there if they're long. I don't expect they're going short. I want to see how the market reacts. If the market can hold here for a while, interesting. But I do think because you're so overbought, the odds don't favor it. And I'm not bearish, I'm bullish. In the cattle market, bullish here too. Higher lows, higher highs. The cattle on feed report I viewed because of the placements number as friendly, and I think the market did too, especially when you look at the feeders. They were up, and that takes the market out of that pattern that it had prior to this, and I'll show you that. You had the lower highs, lower lows. We had talked about the market running the lower Bollinger Band. It had an embedded reading that it lost today. When you lose the embedded reading, and this one lost it, as you can see, with the numbers both getting back, well, one of the numbers over 20, but strongly over it, the odds favor now that price and that 18-day average of closes are going to come together very quickly. Doesn't mean I'm right, but that's what I look for as a market technician. When I'm looking at the hog market, I don't see a trend. I've got the higher high, lower low. I see a battleground, the 100-day average down to the lower Bollinger Band. I have an oversold market. I think the pros have been covering shorts. I don't think they're going long here yet, and that's about all that I can see in it. So when you put that all together, you try to come up with a game plan, and my game plan is I'm going to hold a webinar this Thursday at 1 p.m. Now, if you check your mailbox, you were sent your email, look for the one that says corrected invitation. The first one that went out, I tested it. It worked fine, but when we sent it, it didn't act as it should. The second one did it, corrected. If you don't have it in your mailbox, it means you're not on my mailing list. To get on the mailing list, you can do one of two things. You can call our staff, or you can go to our website if you want and sign up for something else, and we'll try to get you. The simplest thing to do is call our staff at 866-973-2077. They will send you the invite this Thursday, 1 p.m. Hope to see you there. There's no charge for it. Bring your questions. We'll try to answer everything you've got. I'm Ira Epstein. Have a good day.